outlook. The overall medium-term outlook for both the global and domestic economies remain clouded by uncertainties associated with the Russia-Ukraine war, lingering COVID-19 pandemic, and continued lockdown of major industrial cities in China. The persistent tightening of global financial conditions and slowing global trade are also significant pointers to a weakening global economy. On the domestic front, available data on key macroeconomic variables indicate continuing rebound in output growth for the rest of 2022, which may occur at a much slower pace than earlier anticipated in the light of the unfolding domestic and external shocks to the Nigerian economy. The domestic shocks originate from the persisting insecurity, inhibiting economic agents, rising cost of debt and debt servicing, deteriorating fiscal balances, increased spending as the 2023 general elections approach, and a continued uptrend in inflationary pressures. Accordingly, the Nigerian economy is forecast to grow in 2022 by 3.3% CBN estimate, 3.2% the IMF estimate, and 4.2% Federal Government of Nigeria estimate. The committee's consideration. At this meeting, the Monetary Policy Committee was concerned that the global inflationary pressures have continued to trend higher and financial markets were also facing challenges. It observed that this was indeed the trend in Nigeria, with inflation attaining 21.09% in October 2022. The committee, however, seized the opportunity to appraise the efficacy of its decisions at the last meetings and came up with the conclusion that the decisions were beginning to yield the desired results, given that the rate of increase in inflation was beginning to moderate in view of the month-on-month deceleration in prices presented by the NBS, Consumer Price Indices. Members noted that though the global economy was progressively weakening due to the various headwinds derailing the recovery, domestic output growth remained positive as a result of the continued support from fiscal and monetary policy. MPC therefore urged both authorities to continue to harmonize its various policies to achieve the desired objectives of stable price and steady growth. In reaching its decision of whether to loosen, hold, or tighten the stance of policy, committee felt that given that all the causative factors such as Russia-Ukraine war, supply chain disruptions, slowdown in China, and rising inflation in advanced economies and other headwinds were still dominant, a loosening option was not desirable at this meeting. The committee also felt that with the rising inflation, loosening the stance of policy would lead to a more aggressive rise in inflation and erode that gain already achieved through tightening. As regards whether to hold, MPC was of the view that a hold stands at a period close to December festive season and expected heavy spending during the 2023 general election at the time of high inflation would greatly jeopardize the gains of previous policy rate hikes and plunge the economy deeper into the inflation trap. MPC therefore decided to continue to tighten, but at a somewhat moderated rate, noting that tightening the stance of policy would narrow the negative real effective interest rate margin and thus improve market sentiment and further restore investors' confidence. MPC also felt that recent developments in terms of observed month-on-month deceleration in the rate of increase in inflation suggests that the previous tightening moves were yielding the expected outcome. It therefore felt that sustaining the tightening would further consolidate the decline in inflation, albeit more significantly. The decision. MPC noted that inflation has continued an uptrend, even though at a decelerating rate, despite its last 3 consecutive sizable policy rate hikes. The committee's choices were on whether to further hike rates or pause for the impact of the last 3 rate hikes to continue to feed through. At this meeting, therefore, the options considered were primarily to hold or further tighten the policy rate. The options to loosen was not considered, as this would gravely undermine the gains of the last 3 policy rate hikes. Committee thus voted by a unanimous vote to raise the NPR. 9 members voted to raise the NPR by 100 basis points, and 2 members voted to raise the NPR by 50 basis points. In summary, MPC voted to 1. Raise the NPR to 16.5%, 2. Retain the asymmetric corridor of plus 100 and minus 700 basis points around the NPR, 3. Retain the CRR at 32.5%, and 4. Retain the liquidity ratio at 30%.